एवरीवन, YouTube लाइव सेशन में हमारा आज का टॉपिक है अडानी इज वंस अगेन फोकसिंग ऑन बिग ग्रोथ। अडानी ग्रुप एक ऐसा ग्रुप जो अपनी बड़ी बड़ी योजनाएं बनाने और उन्हें एग्जीक्यूट करने में माहिर है। पिछले कुछ महीनों से अपने फ्यूचर प्लान्स के बारे में बिल्कुल चुप है। ऑब्वियसली हिंडनबर्ग रिपोर्ट के बाद हुए इतने बड़े लॉस से वो अभी भी रिकवर कर रहा है। The report had raised major questions about corporate governance and the quality of institutional investment in the Adani Group. While none of the allegations were backed by evidence, the questions raised were sufficient to create panic in the markets. To an extent, Hindenburg and other short-side funds also fanned this panic with their short sales. Now that has been put behind. Adani Group has now announced grand plans to grow its EBITDA by 20% to rupees 90,000 crore by FY25 or latest by financial year 2026. For the recently concluded year FY23, the listed companies in the Adani Group reported EBITDA, that is, earnings before interest, tax, depreciation and amortization at rupees 57,219 crore. Which at rupees 57,219 crore. In FY23, the group had grown EBITDA by 36% YOY and so growing another 20% in the next couple of years should not be too tough, albeit on a much higher base. What is more interesting is the mix of this EBITDA generation. Out of the total EBITDA of rupees 57,219 crore in FY23, the Adani Group generated rupees 47,386 crore from infrastructure related verticals like energy, transportations and logistics. This includes its power, ports and airport businesses. In short, infrastructure accounted for 82.8% of the EBITDA of the group in FY23. That is going to drive profits in the year ahead. अब सवाल है, where will the profit growth come from? अडानी ग्रुप आने वाले सालों में अपनी EBITDA ग्रोथ बढ़ाने के लिए एयरपोर्ट्स, सीमेंट, रिन्यूएबल्स, सोलार पैनल्स, ट्रांसपोर्ट्स एंड लॉजिस्टिक्स में अपनी कुछ मेजर होल्डिंग्स पर विचार कर रहा है. Also, some of the new ventures like data centers are likely to fructify in a big way in the coming couple of years. In the last few years, the group has made substantial investments in ports, renewables and transport. Additionally, the acquisition of ACC and Ambuja Cements is likely to be a big cash cow for the Adani Group. The group is also seeing a lot of positive cash flows from the airports and renewable businesses, which had been guzzling a lot of cash in the last few years. But profitable growth at the group will also be accompanied by very strong deleveraging strategy under implementation. Well, it must be said that the group has taken a lot of initiatives to boost its image by aggressively cutting down on debt. That is also likely to keep the cash flows healthy in the coming quarters. It completed a prepayment of $2.65 billion or nearly rupees 21,700 crore of debt. This has been largely instrumental in the winning back the trust of the investors. Most of these loans had been backed by promoter shares and to that extent these shares has been released and risk reduced. The group has also expanded its funding sources. From being purely dependent on banks, the Adani Group now has a combined debt portfolio comprising of bonds, global borrowings and borrowing from banks and NBFCs. This diversifies their borrowings and reduces refinancing risk. However, the challenges for the group are far from over. Even after the prepayment, the net debt is still 3.27 times the EBITDA, which is fairly high. For the latest year, the combination of cash in hand and flows from operations FFO is rupees 78,000 crore. That is a comfortable scenario as it covers the debt payouts till FY26. However, this is net debt and not gross debt ratio that we are talking about, and also funds from operations can be quite elusive at times. Above all, the overhang of Hindenburg still remains and it is not clear how the company will fare when it comes to refinancing its loans. For now, the group is back to its aggressive ways and that is the good news. Well, आज के इस लाइव वीडियो सेशन को लाइक एंड शेयर जरूर करें and stay updated with blinkX.